Video about the high probability trade of head and shoulders pattern which is appearing in the daily time frame charts. If you want to learn about the complete strategy of head and shoulders pattern, you can watch my videos. And here is Vishalakshi Rajapantala and you're watching Level 11 Make Money YouTube channel for day trading. Let's get into the video and learn the complete strategy of head and shoulders pattern. This video includes the target, what you have to expect when this strategy is forming in the daily time frame. Okay, this includes the target also. Please do watch this video till the end so that you will get clarity about the head and shoulders pattern. Now, what is head and shoulders pattern? This is a powerful setup and this indicates the possible reversal of the index or the stock. For example, the index or the stock is moving upwards and it is making higher lows, higher highs, and it is showing a big bullish move in the market, and suddenly there is a bearish move happening in that particular stock or index, and you have amazed why this has happened, as this is a good stock or an index. Why this is happened? Sometimes the reason is the head and shoulders pattern. Now let's get into the video. What is this pattern? This is a bearish pattern, this head and shoulders. Here we are discussing. We are having bullish view strategy also. We can discuss it later. Okay. Now what is the criteria to have the head and shoulders pattern? Let's get into the criteria here. The criteria here is the left shoulder, head and the right shoulder. As we are having the head, for example, we are having the head, the left shoulder and the right shoulder. Okay, like that in the daily time frame charts, we should have a head, a left shoulder and a right shoulder. So this is the criteria you have to look after. What is the requirement to trade this pattern? Let's see. The daily time frame chart of any index or stock or a volume indicator. These are the two things you need to trade this strategy. Okay, now I'll show you the ideal head and shoulder pattern here. Let's go to here. Yes, this is the ideal head and shoulder pattern. As I told you that it should have the head, this is the head, this is the left shoulder and this is the right shoulder. Now, one important thing you have to look after on this picture is the neckline. Neckline is something that is having the touch points. The price touches this area and then bounces back. Again it comes to the neckline and bounces back, and one particular situation it breaks the neckline. Once it breaks the neckline, that is the time where we have to be very attentive to take the trade. Okay, once it breaks the neckline, we have to wait the price to the pullback. Then we can take our trades and aim for the target. The detailed target is discussed in this video. Now, this is the left shoulder. See, this is the left shoulder. This is the high of the head and this is the right shoulder. One more important criteria here is, this is the ideal head and shoulder pattern. It's having 5 touch points. For example, the left shoulder, the left of the left shoulder has 1 touch point. Here second touch point, third, fourth and the 5th touch point. This is the ideal head and shoulder pattern. Bookish ideal head and shoulder pattern. But in the charts, maybe this is not like this perfect structure or pattern. But you have to train your eyes to recognize the pattern, and you have to gain experience by forward testing and backward testing of this pattern. Okay, this is the price where it stays. The neckline is at 200 and the high of the head is at 250. And let's see the next thing here. Now, what should be your target? You have learned about what is head and shoulder pattern and what should be the target here. Whenever you learn a strategy, you have to know about the entry, exit and the stop losses of that strategy. Now let's discuss about the target here. Now the target here is the neckline minus head top equal to difference. Okay, let's go to here and check. Neckline minus head top is the difference. Now let's see. The neckline is at 200. Let's see here. The neckline is at 200 and the top of the head is at 250. Now let's calculate this here. The neckline minus head top is the difference, which is 50 rupees here, and the neckline minus difference is the target. Okay, we have to subtract the difference from the neckline. 200 minus 50 equal to 150. That means when this bearish strategy breaks from this area, from this neckline area, when you enter at this point, you have to wait to take your profits at 150, which is the 25% decline from the neckline. From the neckline, it should decline 25% as per the strategy. Okay, as per the strategy, you should wait to the decline of 25% from the neckline. If you don't understand this, please go and again watch this. Then only you continue this one. Okay. Simply 25% decrease is the target. Once it breaks the neckline, 25% is the target. Because this is the bearish candle, you have to wait for 25% decrease in the neckline price. Now, I'm going to give you an example. Whenever I discuss about any strategy, I would like to give some examples for that, so that when you see this kind of patterns in the live market or in any backtesting chart, you are able to analyze, your eyes recognizes the pattern. The success part, 20 to 30% of the success is recognizing the patterns. Once you recognize the pattern, you are successful with 40% in your trading journey. Now let's see. Did you see any head and shoulders pattern in this strategy? Take 5 to 10 seconds, and if you see any strategy, please mark this strategy in your mind. Is there any head and shoulders strategy pattern here, and there any neckline you have noticed here? 1, 2, 3, 4, 5. Did you notice anything? Yes, I will show you the same chart with the marked levels here. This is the same chart I have shown you there. This is the neckline, and first, second, third, fourth and fifth touch points. Okay, see, this is here is the breakdown happened, and there is a big gap down here. You can see this in this example. See, here breakdown happened. Here breakdown happened, and there is a big gap up, and there is a retracement till here. This is how the head and shoulders pattern looks like. Now let's discuss this in detail. Okay, this is the first touch point. This is the SBI chart of daily time frame. Here there is a ascent in the price. That means there is an increase in the price, then there is a decrease here. But the traders who know about this SBI, they know that this is going to be a blockbuster stock, so they enter at this neckline. Then again there is a increase in the stock, then there is a decrease here. Those who have missed the rally here or missed the opportunity here will enter here, and then there is another increase here, then there is a drop till the neckline, and here there is a breakout happened here, breakdown happened here. Not necessarily all the traders who saw this chart will see the same head and shoulder pattern, but there are different confluences of factors. That means there are different forces that makes the price to move in this pattern. This is a psychological thing. Once it breaks this pattern, then the traders who know about this pattern will enter at the retest. Okay, what I have seen by the back testing of these things, we have to enter at the back test, okay, of this neckline region, so that you are going to have some great edge in your side. This is the example here, and what should be the target here? I have already discussed. If the neckline example is, if the neckline is at 200, you should be able to take your profits at the 150. That is 25% decline. In this example, there is surely 25% decline is here. Okay. Now, what is your entry? What is your target, and where should be your stop loss? Okay, this chart is not so clear, and I'm going to take you the actual charts here so that I can zoom in, zoom out, like whatever I want. Okay, see here, this is the candle you have to take care of. This is the candle you have to take care of. This should be your entry. We should give some buffer, not exactly above the entry candle, because there are some moves happening over here. When this move happens, there may be a great chance to trigger your stop losses. Once it closes above the below the this neckline, you have to take the trade. This is the pattern. Okay, see, clearly I am showing you. This is the pattern, and once it breaks below the pattern, see, there are so many wicks over here. Okay, once it breaks the pattern, you have to wait to take the trade at this area. Okay, you have to place your stop losses at this area and aim for at least 25% risk reward. You are risking 20%, 20 points, and you are aiming 90 points. Okay, this is how you have to trade this strategy. And a strategy which is having clear entry, exit and target points give you better edge in the market. Now I'll discuss about the psychology here, the clear psychology here, and then we go to the concept of what I'm feeling about this strategy and how I use this strategy and why I'm making this this video. Now the psychology part here is, see here, there is a move happening in the ascent direction. That means this is increasing, and the traders or the investors who are in that particular chart are happy that the chart or the index is giving you great profits. Then there is a decline here, and again those who want to enter that particular stock know that this is going to be a strong support here. Just wait a second. Let's continue the psychology part here. I have already told you that the price is increasing here, and the investors or the traders are happy that the stock or index is performing well. But something wrong happened here. Then again the price comes to the neckline. What is the psychology here is, once it comes here, those who have missed the opportunity of entering the stock or index are going to enter here because of the strong support of the neckline here. Then again, as expected, the price is going upwards and upwards. They expect the market the stock to make higher highs and higher lows. But again, something wrong happened here. This is the psychology part here. Then again, the price drops to the neckline. Here, the psychology of the traders here is because they don't, all the traders don't see the head and shoulder pattern here. What they see here is when there is a support over here and that support holds for two consecutive times, then this time this is going to be a strong support because of the two bullish moves happening here due to this neckline support. Then again they want to enter the market. Then what happens? Then the price comes to the neckline. This is the time where the traders or the investors have to take the decision. Once the price comes here, if it breaks down, then all the traders are going to enter the markets in the bearish view. And sometimes the investors are going to dump that stock because it failed to make higher highs and higher lows, which is an indication for trending markets. So once this happens here and there is a breakdown happens here, then there are higher chances to the price to move in a bearish move. Okay, this is the psychology part here. And if you see here once the breakout happened, I told you to wait to take the trade at the retracement, or you can enter the breakout candle and put your stop losses above the breakout candle, as I have discussed earlier in this video. Then I want to discuss another criteria also here. What if it doesn't fall below this area? Sometimes the market is in the uptrend which is making higher highs and higher lows. Then what happens is, even though this pattern forms here, then the price is going to take support again at this neckline like this. See, the price is going to take support from this area and it goes like this. Okay, for a long time there are higher chances that the price is not going to break this neckline. If the trend is very strong, this is what happens. It is going to take support here and shoot up like this. Okay, this is how head and shoulders pattern is formed. Now let's see what is my view on this pattern and how I am using this pattern in my trading. This is my view. See, this is my view. No doubt, the head and shoulders pattern is the high probability trade pattern, and it requires a lot of research and patience, because you see one or two head and shoulder patterns in different stocks, but it requires so much of research and so much of screen time and as well as the patience. When you are a day trader, you need to be patient all day long, but in case of head and shoulders, you need to be patient for months and years. So once you find out the pattern, you have to stay very patiently, watch out that stock related news very frequently. Then you are going to get the right entry. When your entry is little bit late, there are higher chances to trigger your stop losses and many things can happen. So it needs your 100% attention to take the trade. The next one involves super duper uncertainty. When we are the day traders, as the trading is also a very uncertain game, these patterns are like super duper uncertain patterns. But once you master these patterns, then there are higher chances to make a bulk amount of money in a single trade. Now, why I am doing this? If you are watching my previous videos, I only say that I only trade in Nifty and Banknifty and I am a day trader. But here I am discussing about the head and shoulders pattern. Why? Because I am here to be in this profession for the rest of my life. So I want to upgrade myself with new strategies, new thoughts, and new information into this into my trading career. So once I do this frequently, every day, consistently, every week, every month, every year, within next 4 5 years, I am going to be a great resource. This YouTube channel is going to be a great resource to the traders who want to learn about the stock market. Okay, this is my view, and how I can use this is when I see a pattern in Nifty or Bank Nifty like this, I take this as a reference. Okay, I take this as a reference. Now I will explain this with an example to you. The sole idea of making this video is this. I have recognized this pattern in the Bank Nifty. See, this is the pattern in the Bank Nifty. Even though it is not having the 5 touch points here, this is considered as the head and shoulder pattern here. See here, this is the left shoulder, this is the right head, and this is the right shoulder, and it is taking support here. If you see here, this is the indecision candle, then it is taking support here. Again there is a pullback, again it is moving up. If the Bank Nifty is closing below this neckline like this red candle like this, there are higher chances to be having a bearish move here. See, there are higher chances. Okay, this is how I do the analysis. When this happens in the Bank Nifty, the trend in Bank Nifty and Nifty are in the downtrend, I am going to stay at the R1. Okay, because staying at the R1 during the downtrends, that to this sort of pattern breakdown areas will give you great edge. You're going to get big amounts of money on that particular day, even though all the days in that month is negative days. That one single day will give you lots of money. Thank you so much for watching my videos. I know that if you are watching till this time, you like my content, and I want to reward you that you are watching my videos, because I want to give something back to you, because if you are watching, I'm having a great watch time. That is, I'm going to give you all the August charts, Nifty and Bank Nifty charts to you. If you want those charts of Nifty Bank Nifty for the month of August, you can mail me at tradingtricks44@gmail.com. I'm going to give you this in the description section so that you can have all the charts. If you want, I can give you the charts of June, July, August also. Thank you so much for watching my videos. If you want to learn about this sort of strategies, you can watch my YouTube channel, subscribe it, share this in your trading community. Thank you.